Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the shiny, sometimes slightly dusty packaging of corporate America. Today we're diving into Legend Spices Incorporated's latest quarterly report, and let's just say, this one's a bit of a mystery even for a spice company. So, what is the big story here? Legend Spices, a company that used to be all about seasonings, has made a pretty dramatic shift. They've essentially shut down their operations in Armenia and are currently described as a shell company, meaning they're in a holding pattern, figuring out what is next. It is like a chef who has thrown out all the ingredients and is staring at an empty pantry, wondering what to cook up. Let's get right into the numbers, because that is where things get really interesting, and frankly, a little wild. Looking at their balance sheet for the 31st of March 2025, you'll see something that jumps out immediately: zero in current assets. That is right, no cash in the bank, no accounts receivable, no inventory that they're currently carrying. This zero total for current assets is a pretty stark contrast to December of 2024, when they had nearly $4,000 in current assets. On the flip side, they still have liabilities. Their total current liabilities are over $2,200. This means they owe more than they currently have in liquid assets, which is a classic sign of a company in a tight spot. And then there is the stockholders' deficit. This isn't a typo, it is a deficit. As of the 31st of March 2025, their total stockholders' deficit is nearly $2,240. This means the company owes more money than it is worth, based on its assets minus its liabilities. It is like owing more on your mortgage than your house is worth, but on a corporate scale. Now let's look at how they're performing in terms of making money, or in this case, losing money. For the 3 months ending the 31st of March 2025, their sales were a meager $644. Compare that to the same period in 2024 when they pulled in $1,761. That is a drop of about 63%, which is massive. It really shows how their business operations have stalled. Their cost of goods sold also plummeted from $1,283 to $359. This is expected when sales drop so dramatically, but it doesn't hide the fact that they are not selling much. Their gross profit, which is what is left after you subtract the cost of making the product from the sales price, is just $285 for the first quarter of 2025. That is compared to $478 a year earlier. Operating expenses, which include things like wages and professional fees, were $547 for the first quarter of 2025. While this is much lower than the $5,654 they spent in the same period last year, it is still a significant amount when you are barely making any sales. The result is a net loss from operations of $262 for the first quarter of 2025. This sounds small, but remember, their sales were only $644. Then we see some really interesting one-off charges. They have a $572 loss on impairment of inventory. This means they had inventory that they determined was no longer usable or sellable, and they had to write it off. And then there is a $2,727 bad debt expense. This means they wrote off accounts receivable that they determined they will not be able to collect. When a company has to do this, it is a big red flag about the quality of their past sales or their customer relationships. All these factors combined lead to a net loss before income taxes of $3,561 for the first quarter of 2025. Again, this might seem small, but in the context of their sales, it is a huge chunk of money. So, their net income for the quarter is a loss of $3,561. For the same period in 2024, they had a much larger loss of $5,176. While it might seem good that the loss is smaller, it is primarily because their sales and costs have both decreased significantly, not because they found a magic formula. They also report a foreign currency loss of $348. This is because they were dealing with assets and liabilities in different currencies, and the exchange rate shifted against them. Their net comprehensive loss, which includes all these items, is $3,909 for the first quarter of 2025. This is a significant amount for a company with virtually no operations. It is worth noting that their weighted average number of common shares outstanding remains steady at 6,850,000. This means no new shares were issued or bought back during this period. Let's look at how their stockholders' equity changed. Starting from a deficit of over $68,000 at the end of 2024, they had a peculiar entry, related party debt forgiveness, capital contribution of $69,717. This debt forgiveness was recorded as an increase in additional paid-in capital. Essentially, someone who was connected to the company forgave a debt, and instead of paying it back, it was treated as an investment. This is a crucial detail, especially given what happens next. After accounting for the net loss and foreign currency adjustments, their total stockholders' deficit narrows significantly to about $2,239. This improvement is almost entirely due to that debt forgiveness. Without it, their deficit would be much, much larger. Now, let's talk about cash, because as we all know, cash is king. For the 3 months ending the 31st of March 2025, their net cash used by operating activities was $441. This is a massive improvement from the $6,223 cash used in the same period last year. This improvement in operating cash flow is mostly due to changes in their working capital. For instance, their inventories decreased by $695 and receivables increased by $2,454. In terms of financing activities, there was no net cash provided. This is different from last year when they had $7,796 from related party note borrowings. It suggests they are not taking on new debt or getting new loans at the moment. The net change in cash for the quarter was a decrease of $441. Adding in the foreign currency changes, the total decrease in cash was $789. They started the quarter with $789 in cash. And now, as of the 31st of March 2025, they have $0 in cash. That is right, their cash balance has been entirely depleted. This is where that debt forgiveness entry we saw earlier is highlighted again in the cash flow statement. This $69,717 debt forgiveness is a significant non-cash event that helped boost their equity, but did not provide any actual cash into the business. Let's touch on the business itself. Legend Spices Inc. was incorporated in Nevada. Previously, their main business was making and selling spices in Armenia. However, after a change in ownership on the 29th of March 2025, where Mr. M. Kachin sold his shares, they've stopped their operations in Armenia and are now trying to figure out their next move. As they themselves state, the company can currently be understood as a shell company for the time being. They are preparing their financial statements according to us generally accepted accounting principles, or GAAP. Their inventories are measured at the lower of cost and net realizable value. Net realizable value is essentially what they can sell it for, minus the cost to get it ready for sale. This section is super important. They explicitly state that their accumulated deficit, working capital deficits, and other factors raise substantial doubt as to our ability to continue as a going concern. This means there is a real question about whether the company can keep operating in the future. They plan to raise capital through an offering to address this. This reiterates the debt forgiveness by Kachata M.K. Kachin, their former major shareholder. It was $69,717 and was recorded as an increase in their additional paid-in capital. Interestingly, despite having losses, their income tax provision shows $0 for both 2025 and 2024. This is because they have net operating loss carryforwards which offset any potential taxable income. They have these potential tax assets, but they have also put a valuation allowance against them, meaning they do not expect to utilize them. Moving on to the management's discussion, they are very upfront about the change in control. This signifies a major shift in who is in charge and where the company is headed. The report clearly states they've discontinued operations in Armenia and are searching for a new business focus, essentially confirming their current status as a shell company. This reinforces the balance sheet numbers we saw earlier. They literally have zero in total assets as of the 31st of March 2025. This is a dramatic decrease from the nearly $4,000 in total assets they had at the end of the previous year. This is largely due to the write-downs of inventory and bad debt expenses we discussed. Their liquidity situation is precarious. At the 31st of March 2025, they have a working capital deficit of $2,239. This means their short-term liabilities outstrip their short-term assets. They acknowledge they've had operating losses since they started and expect this to continue. This is why the going concern issue is so critical. The reduction in cash used from operations is a positive note, but as we saw, it is mainly because they're not doing much of anything, leading to lower expenses rather than improved efficiency in generating revenue. The lack of financing activities in the first quarter of 2025, compared to borrowing in 2024, highlights their current inability to secure funds through loans. This is a very serious statement. They are explicitly saying they have no commitments for future financing, and if they don't raise capital through their offering, they might have to shut down entirely. This section again reiterates the critical going concern issue. The company's financial position is so weak that its ability to continue operating is in serious doubt. Now, let's talk about controls. Management has assessed their internal controls over financial reporting and concluded that they were not effective as of the 31st of March 2025. The main reason for this ineffectiveness is a material weakness, inadequate staffing and supervision in their accounting department. They don't have enough people to properly divide tasks, which is a fundamental issue for accurate financial reporting. Looking at the exhibits, we see that their articles of incorporation and bylaws are listed, along with a code of ethics. These are standard company documents. The Sarbanes-Oxley certifications are also included, which is a legal requirement for public companies, indicating that the principal officers have reviewed and approved the financial statements. Finally, the report is signed by Chi-Hui Wang, who is listed as Chairman, President, Chief Executive Officer, Principal Executive Officer, Principal Financial Officer, and Principal Accounting Officer. This indicates that one person is essentially wearing all the major hats in the company, which is often a sign of a small or struggling entity. So, what is the verdict on Legend Spices Inc.? This company has gone through a major transformation. They've stopped their old business and are currently in a state of flux, trying to find a new path forward. The financial numbers paint a grim picture: zero cash, significant debt relative to assets, and a clear statement about their ability to continue as a going concern. The change in ownership and the shift to being a shell company are major events, and it is clear they're hoping a new business direction and capital infusion will save them. However, without any concrete plans for a new venture, and with no current financing commitments, the future looks very uncertain. It's a classic case of a company hitting a wall and desperately trying to find a way around it, with the outcome very much up in the air. Alright, that is our breakdown of Legend Spices Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.